Mahin, hi. Thanks very much indeed for your time. I see you guys have started with a rating of BB minus for the Bank of Industry in Nigeria. Any idea why you guys started off at the same rating as the sovereign?
Bank of Industry is driven. Bank of Industry's ratings are driven by and equalised with the Nigerian sovereign ratings. So what we're saying is that we believe that if required, there's a moderate probability of support for BOI from the state.
Right.
In coming to that opinion, we looked at several key factors. We looked at BOI's ownership is 99% owned by the state. We also looked at BOI's policy role. It plays a key role in development finance. It is important to the Nigeria's industrial development plan, and we believe that it will play a more increasingly important role in that in the government's plans to diversify the non-oil sector. We also looked at BOI's funding reliance on the state. As it stands, a large majority of its funding needs are provided by the Central Bank of Nigeria.
Now, before we get into the details of the fundamentals behind that rating, Mahin, I just wanted to ask if there are instances in other parts of the world or indeed in Africa where the ratings of a particular development finance institutions may be better or even worse than the sovereign on which it is, of course, in the main based.
It's actually equalised with the sovereign, so
always.
So it's a double B minus with a negative outlook, which is exactly the same as the sovereign. BOI's ratings are actually higher than the ratings we have for the commercial banks, but given BOI's close links to the sovereign, it's effectively a policy bank. We believe that the rating should be equalised for the reasons that I mentioned before.
Yeah, but are there any other instances where the rating is actually different for the rating agency itself from the sovereign? Do you have any instances like that?
No, we don't have any international ratings on other development banks in the region where the ratings are not equalised with the sovereign.
Yeah, actually what I'm trying to understand is if BOI, for instance, ran its book very well and indeed managed its affairs in a satisfactory manner, I was just trying to establish the probability of perhaps BOI getting a premium rating to the sovereign. So you are saying that there is no chance of this happening at all, never mind how they perform?
No, it's currently equalised and we don't expect any change. We don't believe it should be rated higher than the sovereign. The sovereign, it's really the cap.
Sure. Okay, so let's talk a little bit about the fundamentals of the bank itself. As you note that the shareholding here is 99% held by the government, and in terms of perhaps reverting to the sovereign in case of trouble, there's every probability that they will be backed up by the sovereign. Is there any chance that perhaps the incoming administration may well have a different view in terms of backing up the Bank of Industry, or you guys have no concerns on that front?
We believe that BOI will remain important to the economic development plans of the sovereign. Despite the new government coming into power, we believe that industrial development will remain a key part of the overall sovereign story, and therefore BOI's importance will continue to BOI will continue to remain an important part of that.
Let's talk about some of the work that this bank does. Now, they finance small, medium and large-scale companies. Looking at the type of companies that these guys look at, and also looking at, and I don't want to sound like I'm stereotyping Nigerians here, looking at the governance structures within the Nigerian banking financial system, do you have any concerns that perhaps the fact that they finance small to medium enterprises might make them riskier than normal?
That's BOI's mandate. BOI's mandate is to finance the industrial sector, and a lot of the companies in that sector are SMEs. So obviously the risks are higher in the SME sector, but we believe that these are emerging companies in emerging sectors. It does increase BOI's risk profile. We expect its asset quality to be worse than what we see for the commercial banks, but it doesn't really reflect on BOI's headline ratings.
Yeah, I see you noted in your opening remarks that BOI is getting a higher rating than Nigerian commercial banks. Is that a function of its own management and governance structures, or this is more really because it is backed by the sovereign?
The ratings are driven by the fact that it's almost 100% owned by the sovereign. It's systemically important as a policy bank, and its funding relies on the sovereign, whereas none of the commercial banks have those features.
Yeah. What about the quality of that loan book? Is it any worse than that faced by commercial banks?
The quality is slightly worse, and it really reflects, as I said before, it's BOI's lending to emerging industries and emerging borrowers. It's not significantly worse than what we see at the commercial banks, but it is worse.
Do you expect them to? Sure. Do you expect them to be coming to the market to raise any capital?
It is looking to diversify its funding as it looks to grow its loan book and looks to extend the tenor of its lending. It has raised some external funding, but I think they will try and raise longer term funding to match the longer tenors on its loan book.